Welcome in, everyone. We have a bit of a demo here, and boy, do I have a lot to show you. This is what I've been working on for the past month with my developer, going through designs, having late night meetings, just poring over this and trying to make it as good as possible. And we finally got, I believe, the beta version out. It's the first version. It'll likely have a few bugs, but it's good enough to release, and I'm excited to see your reaction and have you use this upgraded product. What you need to do to get to it is simply go to the portfolio page. Now, if you're on the normal menu, it literally just says portfolios. So you click on portfolios. Some of you will see the old version, which looks old. Just hit Control-Shift-R, or if you're on a Mac, Command-Shift-R. That'll hard refresh the page and load in this new, beautiful version. Now, for a minute, I just want you to look at how gorgeous this looks. I know I'm a bit biased. I am, after all, the one that designed the page. But it really does look beautiful. I use a lot of software. I use a lot of websites. I have experience using them. I can feel when software feels good to use and when it doesn't feel good to use. And this feels good to use. It just looks smooth and slick and it's easy to use and it just feels great going through it. So I focused a lot on a lot of the small things that I think aesthetically just make this more of a fun piece of software to use. And I want to go through and break it down. First of all, when you load in and you do not have a portfolio, you'll see something different. It'll look a bit more like if you're on like, this type of page, like it will just have like a more simple viewport and it will ask you to enter in your portfolio. But once you enter in any data, then you'll see your portfolio screen build out. And so it's like magic. It'll build all these different views for you and you'll see this more full page. Now, let me go through from top to bottom here and just kind of break this down. At the very top, what I did was I compiled all the views up here to this bar. So now we have what's called composition. And composition, like the name implies, is very straightforward. It is the composition of the portfolio you're currently viewing. So we have right here the passive income portfolio. We are viewing the composition of it. If we switch over to holdings, we are viewing the holdings of the passive income portfolio. And this is where we can update holdings. We can do bulk updates, and it's far more powerful. It has way better error checking and handling and just way more powerful. We'll get to that in a minute. We have a dividend screen here, and this is of the same portfolio. We have a breakdown page, which gives you extra data, and we have a historical value page. So all of this, it's just upgraded across the board. Now, again, this navigation bar right here is for the different views within your portfolio, and it tells you where you currently are. So you have an easier time determining what you're currently looking at. So that's right at the top. And if you want to add a new portfolio, if you already have one, but you want to add a new one, that button's always right there. So you can create as many as you want. Then we go further down. The portfolio selector. Now, to select which portfolio you're on, if you've created more than one, you simply hover over the portfolio name and you'll notice that it brings up this little pen tool there, or a little pencil tool. Now, this is something new as well. If you hover over the pencil tool, it turns orange. If you click on it, suddenly you can edit the name. You can edit the name right there. You can hit the green check mark or hit the X if you want to back out. That changes the name of your portfolio, which is new. We did not have that in the old version. So there you have it. You can easily change the names. And the nice thing is that it hides it when you're not looking at it. So it still looks really great when you're not hovering over that. But there's more to this little selector here. It's actually a lot more powerful than it seems. For example, if I click on the portfolio, now we have a drop-down list here. And let me try to blow this up a little bit temporarily. So we have the drop-down list here. And you'll notice that I have two portfolios. I have the passive income and I have the story fund. Now, if you have just one portfolio, obviously that's going to be your only option. You're not going to be able to select between multiple. But what this does is if you have two or more, it automatically allows you to select between the two. So I can switch over to the story fund and immediately I see that, or back to the passive income. Or you have an additional third option here, the combined portfolio, which takes all of your portfolios and combines it into one total portfolio. So let's take a look at that. And that shows us what it looks like if all of our portfolios are combined. So this is actually what it looks like with the Joseph Carlson portfolio as a single portfolio. We have S&P Global as my largest company, just barely by 11%. Then Netflix is my second largest because Netflix is a massive gainer. It's up like $90,000 or something crazy. Then we have Amazon and MasterCard, and it kind of shows me in a different viewpoint. We have the combined performance of Google. I'm actually in the red in the passive income portfolio on Google, but I'm in the green on the story fund by quite a bit. So overall, I'm in the green. So this shows you the combined view, and I think that's very powerful. When I combine both of my portfolios together, I have a combined $1,243,000. I earn $7,000 per year. Very, very cool. And it's 15 holdings total. Now, again, this is a very improved selector tool. I think the combined portfolio tool is awesome, but there's way more to show you. So let's go ahead and go through it. Now, before we get to the portfolio analysis, which I think is just kind of like the crown jewel of this new feature, we'll get to that in a minute. I just want to talk about the composition view here. What I've tried to do is make it so that it's both shareable, meaning you guys can easily take screenshots of it and share it with each other. So I can zoom out here and snap a screenshot real easy and post it on Discord. And it's just useful. It looks good. And like most things in Qualtrim, I don't focus just on presenting as much data as possible. I focus on making it as useful and as meaningful as possible. What I decided to do was go with, instead of a pie chart or a donut chart that shows off your holdings in the donut chart or pie chart way, I decided to go with a vertical bar chart. So that's what you're seeing here, is a vertical bar chart. And there's a specific reason. When we have the pie chart or the donut chart, you have a big circle, and then your holdings are divided and they look like this, right? And when they get to the smaller side, they get closer and closer and closer together. Well, that sometimes can look okay if you have like 4 holdings, but if you have 15 holdings, they get so small here. The pie chart gets so small that you have a bunch of like arrows going here with the names and tickers. It looks really difficult to read, or you just have a list of tickers underneath. You have to connect the colors with the specific slices. It just looks confusing and terrible. It doesn't scale well. If you have over 10 holdings, it doesn't look good. Furthermore, it's hard to look at the relative size of one slice of the pie with the other. So it's not even visually that informative. I think the pie chart is not a good way to look at your portfolio holdings. In fact, I believe the vertical bar chart is far superior in a lot of ways. For example, I can look at this and I can immediately see how close MasterCard is to S&P Global. I can see right away that they're almost the exact same holding weight. They're very close, right? Relative, it's very visually easy to see. Then I can see that next up we have Costco, which is my 3rd largest holding, which is kind of crazy. I haven't bought this one in a long time. It just keeps going up. But I can see that it's like 70% of the way there, right? Maybe 70, 75, 80%. And that Intuit and Texas Roadhouse are not far behind. Visually, I'm immediately informed of that, and far better than a pie chart. Another thing is, this allows this to scale indefinitely with none of the holdings being difficult to read. So I can have 15 holdings, 20 or 30, and it will keep scaling, and I'll be able to read all the holdings and see all the weightings and see how they stack up to each other. I can immediately tell that Salesforce is like half the size of S&P Global. It's just very easily visually able to tell. Now, we also have the weightings right here as well. So you can see the weightings in numeric form next to each other, and we have the gain loss. I can see that, Costco has been a big gainer, 135% overall. Intuit, big gainer. Texas Roadhouse, massive gainer. Salesforce, the only company that I'm in the red in my portfolio by a tiny amount, and so forth throughout this. So I decided to go with the vertical bar chart because I thought it had many advantages over the traditional pie chart. I think that you'll like it more. I think it's very easy to share, to get feedback on your portfolio, and that type of thing. Now, we move on to what I think is like the big feature here, which if you see this big part on the right, it says portfolio analysis. Then it also says AI generated, and it says 0 out of 5. Here's how this works. At the beginning of every month, you'll be given 5 fresh AI generated portfolio analysis. That's what we're starting with, is we're starting with 5. I hope to bump that number up over time, but when I'm just releasing this feature, I want to make sure I don't give like way too many and it costs way too much, right? We're not increasing prices here, so I want to be careful about it first. But let's go ahead and just take a look at how this works. Right now it says no analysis available. It says you've used 0 out of 5 analysis this month. Click Analyze Portfolio to generate a new analysis. So let's go ahead and analyze the portfolio. Now it's loading. We'll test this out. I feel like it's like a first rocket launch or something where I'm testing this out. Hopefully it will work. This is just completely live. Sometimes it takes a minute because we're actually doing a very complex prompt. This is not a simple prompt. But there you go. About 10 seconds later, we got the AI analysis and it gives us a notification saying that it's done. And this is a beefy AI analysis. This isn't like 3 bullet points. We have around 900, maybe 800 words worth of analysis here. And I want to go through it because what I decided to do was give the qualities of the portfolio, a breakdown of your holdings and the type of qualities these companies have, and then a big breakdown in depth of the potential risks of your portfolio. So there it says we've used 1 out of our 5 analysis for the month. Let's go ahead and take a look at what this says. It says this portfolio showcases a collection of businesses characterized by strong competitive moats and entrenched industry positions. For instance, Moody's Corporation and S&P Global enjoy oligopolistic status in credit ratings and financial analytics, enabling them to extract high margins through pricing power and sticky customer relationships with recurring revenue streams. ASML and Microsoft stand out for their technological indispensability. ASML's extreme ultraviolet lithography, EUV technology, is unrivaled and crucial for global semiconductor manufacturing, while Microsoft leverages enterprise software and cloud ecosystems that are embedded in workflows and countless organizations. Apple and Intuit similarly benefit from high switching costs. Apple's tightly integrated hardware-software ecosystem and brand loyalty provide consistent cash flow. And Intuit dominates the financial management software landscape for both individual and small businesses with network effects and subscription models. Salesforce's deep integration with enterprises through its CRM platform, along with continued innovation in automation and analytics, lends further resilience and monetization depth. There is also strategic emphasis on companies with high recurrence in revenue. MasterCard and Booking Holdings, for example, orchestrate global payment and travel systems more as a toll collector than an asset-heavy operator, granting them scalable business models with considerable resilience to shifting consumer preferences. Costco's unique membership model gives it a predictable stream of revenue and strong bargaining position with suppliers, translating to customer loyalty and efficient inventory turnover. Companies like Texas Roadhouse add a growth angle through geographic expansion and strong brand presence, albeit with distinct operational models compared to the tech and finance and fintech names. It's funny that it points out, it's like, what is Texas Roadhouse doing in here? Texas Roadhouse adds a growth angle through geographic expansion, albeit with the distinct operational model compared to the tech and fintech names. So it is kind of suggesting, hey, Texas Roadhouse is unlike most of your other companies. Most holdings are run by capable management teams with long-term vision and demonstrated knack for capital allocation and delivering value through both users and shareholders, creating an environment that prizes innovation, operational scaling, and durability through various economic cycles. There is the quality breakdown of my portfolio. So my portfolio, as it goes over, is extremely technological focused, financial focused, recurring revenue focused, and customer loyalty focused. And that's how I would describe this one. Now we get to the risks. And I actually think the risks I just think are more interesting because we so often like to lend ourselves and look at the qualities of our companies. But when it highlights the risks, it really strikes through sometimes. It really does a good job of highlighting real formidable risks or real present risks for the portfolio. Here's what it says. Despite the formidable business qualities of these holdings, There are nuanced risks linked to dependence on specific regulatory, technological, or macroeconomic factors. The reliance of Moody's and S&P Global on regulatory frameworks for ratings creates an environment where significant legislative challenges could dilute market power or open the doors to new competitors. Similarly, ASML's position in the global semiconductor supply chain exposes it to geopolitical tensions and export controls that could impair demand or limit its addressable market. In technology, Microsoft, Intuit, and Salesforce, while enjoying high switching costs and embeddedness, face the risk of technological disruption, be it through AI, democratization, open source alternatives, or shifts in enterprise software procurement that could erode their pricing power faster than expected. Consumer-facing names like Booking Holdings and Texas Roadhouse are vulnerable to exogenous shocks like pandemics, rapid changes in consumer travel or dining preferences, or inflationary pressures that could compress margins. Despite their brand's staying power, Apple, while resilient thanks to its ecosystem, could, with elevated expectations for perpetual innovation and any perceived stagnation, could quickly affect consumer demand. I think these are such a good outline of the risks. Like everything is literally spot on. Saying that Apple's big problem here, while it's resilient thanks to its ecosystem, comes with elevated expectations of perpetual innovation, that is so true. Apple is under fire. They're under pressure to innovate, and they're having a tough time really innovating right now. So that is such a good risk for Apple. MasterCard, dependent on transaction fee model, could find itself challenged in a future of decentralized finance or alternative payment rails that bypass traditional networks. In aggregate, the risk profile is not merely one of a company execution, but also of evolution of technological platforms, regulatory landscapes, and consumer behaviors, all of which is, if misjudged, could erode the very moats these businesses painstakingly constructed. So the way that I read this is it just breaks down the risks so specific to my portfolio. My portfolio is not going to just be beat by competitors. The companies are too strong. So it outlines that that's most likely not the biggest risk. Like companies like Moody's and S&P Global are not going to be outcompeted. The way that they could be destroyed or have poor returns is the regulatory frameworks for ratings changes, significant legislation. ASML could have geopolitical shocks, right? They're in a very dicey area. They're very close proximity to China. There's risks that are outside of the control of these companies themselves. So I really like the way that it does this. And by the way, it's very, I mean, the way that we formatted it to come up with these type of overviews is very detailed. And I've tested it across different portfolios, and it really will break down whatever your portfolio is and give you some food for thought. Now, of course, this is AI. It does make mistakes and that type of thing. But what I will say is that it's very interesting to look at. It's a good, I think, check against what you're investing in. It might give you some feedback, and it's just very easy to use. You may as well. I mean, you can throw your portfolio in here, click a button, and then you get instant feedback, both good and bad, about your portfolio. Things to consider. These are really good things for consideration. So very cool to see this. Now, if we go back to something like the combined portfolio, you'll notice I have the same thing. And this is the breakdown of my combined portfolio. I won't go over it in this video. But what I want to mention here is if you do more than one, if you analyze a portfolio and then you make a slight change, like let's say that I add one holding. Let's go ahead and just add one holding. I can do that. We have to select a portfolio here. So I'll go to the passive income portfolio. Let's take a look. Let's say that I add Texas Roadhouse, or not Texas Roadhouse. Let's add Uber. Right? We're not really doing this, so I apologize, Uber investors. Let's say I buy 100 shares and my cost basis was like $90. I don't know, $85. We'll add this new holding, and we have it there. Take a look at that. It's so easy. You don't have to refresh the page. It shows you the log of changes. You can undo and redo things. It shows you how it factors into your portfolio, highlights it, and then you hit this little save icon there. It's beautiful. Gives you a nice notification. Again, this feels good to use. It just feels good. We go back to composition here. We go back to the portfolio page. We have Uber Technologies there. It's a small holding in the portfolio, but you'll notice we got a new message here. It'll tell me that your portfolio holdings have changed since the last update or the last analysis. So it lets you know that so that you're working with an analysis here. You're looking at one that was based off your prior portfolio, right? I added Uber. It did this analysis before I added Uber. So it gives you a little notice that, hey, this analysis may not match the exact portfolio that you're looking at now. Now you can use another analysis, but keep in mind, you get 5 a month. So use them intelligently, right? Don't just use all 5 the first second because you might want to change your portfolio throughout the month. Now, I want to move on and go to the combined portfolio here and just show you something else cool. If you do a bunch of analysis over time, what we wanted to do is actually save them. So you have a history button here, and it will save like the last 6 of them. I can go back and say, hey, I want to take a look at this one. I want to take a look at this one that I did, right? It allows you to save them. So you can see the different analysis over time as you change around your portfolio a little bit, you just have that history, you don't lose it. So all the past ones you should be able to see. So we've gone over a little bit of the portfolio view. Let's go ahead and take a look at the holdings view. I don't want to spend too much time on this. The whole holdings view, it's just a nicer table, shows you things more cleanly. When we're in the combined view, you can't edit anything, right? Because it's combining 2 portfolios. And if you edit something, it doesn't know what portfolio to edit. So you have to go to a individual portfolio to edit stuff. Under the holdings view though, we have a much more powerful upload tool. You can drop in a CSV file. It works very similar to the previous one, except it has additional options. You can determine whether or not you just want to add holdings with the CSV or you want to remove any that aren't in it. It kind of explains them here. You can keep the existing holdings unchanged or the holdings found in the CSV, you can replace them. Very easy to use, or you can individually add and edit holdings as well. The nice thing is anytime that you do anything, it'll also like show you what it's doing. So it'll highlight what you're changing. For example, if I want to change anything, so if I want to change how many shares of Google I have from 298 to like 250, and I hit enter on that. Let's take a look. It highlights it. It lets me know that what I did here, right? It has the changes modified. Google 250. I moved it to 250, and then I can like undo that change. So it's very cool how you can edit this and easily modify it. It's very advanced and very easy to use. I think that once you learn how to use this, it's just much better than the previous version. So that's the new holdings tool. We also have the same dividend information. It shows you the yearly estimated income, the income by holdings. You can see your upcoming dividends, your recent dividends. We have the breakdown. This is something I'm going to expand over time. We've cleaned this up a little bit. We have your gain loss per holding, your portfolio value by sector, the price to earnings ratio, now ordered by lowest to highest. So it actually shows you in a more intelligent way the price to earnings. So this is giving you a breakdown. What I'm going to be doing is adding another 3 different bar charts that automatically generate. They give you a bigger and bigger breakdown of your portfolio, then probably 9. It'll look more like the insights page, but just for your portfolio with a bunch of analytics about it. So we're going to be adding more stuff to that as well. Then we have the historical values page, which we've put a few charts in here. Your portfolio over time, your year-over-year growth. People that are entering this in month by month, you can also do so much easier. The way to enter this is so much easier than before. So if you want to keep track of your portfolio every month or your dividend income, now entering that information in is a breeze. And overall, again, I think it looks gorgeous, and it also looks really good in dark mode as well. It just looks really, really nice. I hope you guys enjoy it. There's going to be maybe small bugs or something. Every time we release new software, we get people pointing out bugs. We're going to be looking at that over the next week. We'll get all the bugs smashed. We'll make sure it's working perfectly. But let me know what you think. I think you're going to love it.